Hey everybody, welcome to another edition of the AccessToTrade.com nightly update. Hope everybody is doing okay. Just before we start, I kind of ran a poll, just kind of a last minute poll, because I always hear, a lot of people that have this misconception. The misconception is when you're a newer trader, okay, when you're a new trader and you don't have a lot of funding, right? Because again, the backbone behind trading is funding, right? You got to be as heavily capitalized as possible. I apologize for this little tidbit here. I was joking around here a couple of nights ago and I left it in here. Anyway, so I get this question all the time. Well, Dan, how much is a good amount of money that I should start out with? And I usually just think for a second and chuckle, and I always write back the same thing: as much as you possibly can times 100. Okay, because realistically, there's no such amount that's good. There is no such thing amount that's great. It's as much money you could possibly put aside to start, whether your investment or trading career, that is not going to break the piggy bank, where it's not going to put a lot of stress in your mind, and you're not going to be doing a lot of things emotionally to kind of engulf yourself in every single trade. And there's a big misconception out there that says if you are undercapitalized, and again, what I mean undercapitalized, probably less than $30,000 to $50,000. Okay, maybe 30, maybe $30,000 to $25,000. Okay, and when you are less than capitalized, there's a lot of problems with that, because again, you try to emulate, you try to get too big too fast, you try to run before you walk, and morally, what we always talk about all the time is you put yourself in a position that you have to be perfect, which is true for every single trader, but especially when you're undercapitalized. And for some reason, okay, especially in the social media, and kind of this whole social media environment, the question is, why do so many traders, okay, why do so many traders feel it's necessary that they need to automatically dive into the small cap market, right? Think about that. And I know cheaper is better in life. Cheaper represents an opportunity to kind of maximize your scalability, right? When you're trading smaller stocks, you don't need a lot of capital to generate some good size. But the problem with that is there's usually a lot of things, a lot of unforeseeable situations that come up. And one of the most amazing situations that come up, okay, and what we talk about all the time, is artificial volume. So I ran a little poll, okay? I ran a little poll here. And this is the poll I ran on Twitter. And you can see it was only 46 votes, right? Only 46 votes. So it's still early. I only ran it about 15, 20 minutes ago. Actually, 30 minutes ago, as you can see here. Only 30 minutes ago. And my question was, what percentage of small cap stocks volume during the day is artificial? Okay. So as you can see here, from just again, only from 46 people, but 33% said 25%, 46% said 50%, and 21% said 90% of all small cap stocks that are trading are artificially inseminated, right? Artificially inseminated. And my question to that was, or at least the follow-up question is, well, what the hell are you doing in those stocks, right? Why are you in those stocks? Why do you put yourself in a situation that all the criminal enterprise are in those stocks, are in the same trade that you are? And again, if 90% of all the traders are not making money, why would you be in the same trades as them? And especially, why would you be in the same trades as them as kind of a subdivision of all these small cap stocks? Now, again, myself, I do trade small cap stocks. Everybody knows I trade small cap stocks, but I trade small cap stocks when there's a long duration, there's a long distribution, and there's a lot of volume going to the break. So when it finally comes, okay, I'm ready for it. So for example, today, right, I went through a lot of these small cap stocks today. A lot, because again, when I chart in the night, I go through a lot of names, and all these names that popped up got rejected. So you see these things like Seed popped up, got rejected. And all you see, just a whole bunch of these stupid stocks, just random plays that these random avatars say this is the next one, and they go up 3 cents, and you buy it, and then they go up down 10 cents, and there's another stock, this is the next one to go, and they go 3 cents, and they go down 10 cents, and this keeps on spinning over and over and over again, right? Over and over again. And my question is, well, why? Well, why are you doing that? Like, why are you putting yourself in that situation? Why aren't you putting yourself in a situation that you could grow your account organically? And somebody turned to me and said, well, I can't trade Amazon. I can't trade Google. Well, if that's false, if you have a $25,000 account, right? $25,000, your buying power is $100,000, right? Your buying power is $100,000, right? If you Amazon's what 100, 800 and what is it? 850 grand, right? So 1,000 shares is 850 grand. 100 shares is 85 grand, right? 85 grand. And again, well, why would I tie up risk 85,000? First of all, you're not risking $85,000. Okay, let's not act like a 2-year-old. Okay, you're not risking $85,000. You're buying 100 shares, and that 100 shares of Amazon. Okay, if you're swinging it properly, coming out of channels, could make you 20, 30 points, right? 20, 30 points if you're a swing trader. If you're a day trader, as you see what we do through all these channels, they can give you cash flow $1, $1.50, $2, $3 at a time. So you can build up your account very organically. So why put yourself in a situation that you can build your account organically, and by the way, save yourself money on commission? Because when you're buying, for example, 100 shares of Amazon or 500 shares of Amazon compared to 3,000, 5,000, 10,000 shares of a stock that's going up 3 cents and going down 10 cents, isn't that a little bit prudent for more on much more on the fiscal side of saving commissions, and number two, actually learning how to trade properly? And I see this all the time. Well, and there's all these different mistakes, and there's all these different mistakes, and there's all these different excuses why people trade small cap stocks. Now, again, like I said, I like small cap stocks. Like for example, today, I bought INAP. Okay, I bought INAP today. Okay, I bought INAP, and if you guys have been watching me for the last, God knows, for the last even 2 months, right? For the last 2 months, I've been watching this flag for 2 months, right? The longer the distribution, the bigger the move. So finally, when it broke, it really broke. So I made money on the trade. And again, it would take really a lot for me, okay, really, really a lot for me to get into a small cap stock. The majority of my trades, and I think I literally traded pretty much every single, I think most of the high beta names today. If you look at the majority of the trading, it's very, very organic. And if you're trading organic and you want to learn how to trade organic names, well, why would you put yourself in a situation, to trade stocks that have no chance of survival because some random avatar told you to buy it? Think about that. Just really think about that. At this point, if you believe for a second that 25, 50% of all the stocks in the small cap market are being manipulated with artificial volume, a light bulb right away should be going up in your head to maybe there's a better approach. Maybe there's an easier way. Maybe there's just a more efficient, fiscal, feasible way to feed your family than the garbage that you're trying to do. And if you're not getting anywhere with these things, again, that should be another series of clues. Life is a series of clues, right? If I run right now full speed ahead and I crash into the wall, it's going to hurt. Do you think I'm going to do it again? If I do it again, do you think I'm going to do it the third time? Eventually, I will knock myself out and not do it anymore. And I'll have to look for a better way to achieve my goal. Maybe next time I'll use the door instead of running headfirst into the wall. Well, again, everybody's an adult. Just my 2 cents. Your dance floor. Your dime, your dance floor. So let's get into the markets, right? Let's get into the markets. S&P, again, just the stock market just doesn't want to go down. It's just amazing. Again, I am a bull, not a bull, not a bear. I'm a realist. I trade everything. I trade everything. I trade on the long side. I trade on the short side. I trade pivots. I trade for cash flow. That's all I'm doing right now. The most important part of what we do is trying to capture the biggest bang for our buck without risking, much money. And what we've seen here is a dynamic market right now that's completely in its mind of its own. And the one thing that I will tell you, and I say this all the time, the rug pull will come. It's evident. Every single time we get a downtick in the future, it could be that top, right? It could be that top. Sometimes it will, sometimes it won't, but it's very, very important to recognize where you are. And, we started getting more evidence from the Fed today, right? More evidence of the Fed. And, it's so ironic that a year ago, they kept on pausing the rate hike. We weren't there yet. The training wheels couldn't get off. We're not going to get there. And then all of a sudden now, chest out, pounding the chest, we got one rate hike out of the way. Now we're looking for a series of more. Let's see about that. I still believe, we're not there yet. I think the first rate hike was a panic move. We'll see. We'll see what happens. But for now, the market's holding straight. It was an okay day today. It would have been better. Again, I turned another two profitable trades today. into flat trades, which were just amazing. And I caught two good trades, one on INAP, one on Netflix towards the end of the day. And we had some pretty decent pivots in between. But what I find it's really amazing is that every single time, and this is kind of and this is even after the Fed announcement. Every single time they get the futures lower, they get the futures right back up. It's the most amazing thing, and that's where we are. That's where we are. And it's kind of a broken record, but that's the reality where we are. So let's talk about some trades today in the room. We'll show you exactly where the pivots were and why they were triggered. So INAB was my first trade of the day. Again, the only reason I took the trade, I've been watching this. This has been on our watch list for like 2 months. I knew this 195 thing was going to be big, and once it broke the 195, that's where I bought it. I bought it at 995, sold it at 215. The only problem was the reason why I sold at 215, because again, if you believe my whole stupid theory that stocks stop at supply, right? Here's your supply right here. So I sold it at supply, feeling so good about myself because, wow, damn it, I just caught this pretty decent move here in about 5 seconds. The problem is it ripped right through, got halted, and went to $3. I must vomited out of my mouth. But again, technically, it should have stopped at this 200-day EMA, and 9 out of 10 times it would have. Unfortunately for me, it didn't. It just kept on going. But again, no complaints there. Let's talk about Facebook. Congratulations to all you guys who did catch Facebook. Facebook was the strongest one. Out of all these names, out of all these beta names, Facebook was definitely the strongest one. Maybe the confirmation of the Major League Baseball agreement to broadcast a game once a week. So here is opening range candle right here. Okay, here's your opening range candle supply. So it stopped that supply. Again, you need another candle to confirm supply. So this was the candle that confirmed supply. So congratulations for all you guys who did catch Facebook. Nice move there as well. Amazon, I just want to give you some afternoon, some lunchtime pivots. And again, continue to talk about the sneaky pivots at lunch. Here was the afternoon pivot here at lunchtime, this 57 pivot. When I went to lunch, it went to 58.5. Again, not the biggest move, but a good move nevertheless. Baidu, again, is one of the trades. One of the trades that I had a nice pivot in. Okay, I had a nice pivot, and the problem is I didn't take any money off. Okay, I didn't take any money off. Here was the initial candle. I bought the initial break. It went up 50 cents. I didn't take a single share off because I thought this thing was going to explode, and it didn't. Unfortunately, I wound up breaking even the trade. Google as well. Same thing with Google. I had, again, not a big move. Okay, not a big move. So I can't even turn around and say I couldn't take any money off because, here's the initial candle here. I bought it here. It went up maybe 60 cents. Obviously, I wasn't doing Google for a 60-cent trade, and just I sold it even. Netflix was good. Netflix was good. Netflix was pretty clear. So here's the candle right here. This 143.38, and once it broke 143.38, that's right. I bought it. I was making sales all the way up. My highest sale was up 55 cents before the market kind of reversed. But I really like this. I really like this trade. I really like this trade going into tomorrow. We'll talk about that in a few minutes. Also, let's see here. What else? Off the watch list. Let's see here. Off the watch list, guys. Let me just get into my list here. So I definitely think there's some names there that definitely did pretty okay. Let me just take a look at it. So let me just go down through the whole list. CBMX, I know didn't trigger. THC didn't trigger. Let's see here. THC didn't trigger. LYTS, I wasn't really paying attention today, so watch list. LYTS never triggered. 1070 was the trigger. LTRX did trigger because I know Trahan took the trade. LTRX, we talked about that. Let's see here. We talked about that 244 area to, not a big move, 263, but it still went higher. DVA pretty much closed right on the breakout. ZIOP didn't trigger, Life didn't trigger, and CHGG didn't trigger. So only one thing looks like triggered off the watch list. Okay. So only one thing only triggered off the watch list as well. Let's see here. What else did we do here? I think that's about it. Oh, and the Tesla trade I missed. I know 3 people called it. I wasn't one of them. I went to lunch. Here's a sneaky pivot on Tesla. Here's a sneaky pivot right here we talked about on Tesla, which was right here. It was the highest candle into supply. this candle took out that candle, and nice move here. Obviously, Tesla continues to do well despite despite a lot of naysayers, this, that, the other, third. Tesla continues to do well. I thought the shares were kind of pretty. I mean, I love that. I mean, this is my favorite stock to trade. I mean, both ways, long and short. I have no bias. I'm really rooting for the company, but I have no bias which way the stock goes. And make a long story just a little bit shorter. I really believe that 120-point move in the shares over the last couple of months was going to be kind of in the stock. Apparently not. It's still up about 2% post-market, but we will definitely be watching this thing for a possible reversal tomorrow, just the same way as we watched the video last week. So let's get into the watch list for tomorrow and see exactly what's what. Yeah, I want to start out with Netflix. The high today was at 144. Here's kind of what we talk about a free trade. Okay, guys, this is kind of what we talk about a free trade. And a free trade is usually a very, very close trade, close to the whole number break. You can see here 144 stop today. It needs to just get above this 144. If it gets above the 144, I mean, look where it closed. The risk is 15-20 cents in the trade for a possible move to 45.5. So keep an eye on that. CHGG, I still like this. I think this thing goes higher. Good consolidation. Good rest day. The longer consolidation, the better. 8:30, I think this thing still goes. Tesla, again, I'm watching Tesla tomorrow for kind of a blow-off top into supply. And if it starts reversing to the downside, just like NVIDIA did, and just like Amazon did, all these names did, and Facebook as well, we could be looking at a 60-minute low short. Okay, 60-minute breakdown short. So I'm definitely watching Tesla. This little one for all you small cap lovers. Keep an eye on this BASI. It looks like a low float name. Keep an eye on this thing. If it gets above this 140 area, who knows? Maybe this thing goes. QTWO is flagging here. Nice looking chart. Nice looking chart. It's flagging here. Looks like a break above this 3650 area can get this thing going. And SHPG, which is did I get this wrong symbol? SHPG. Or is it GP? I'm sorry, PG. No, it's PG. Shire Pharmaceuticals. It's flagging really nicely. It's flagging really nicely. Set an alert, guys. A break above this 182.50 area. So, guys, I'm gonna head out for the evening. It's 9 o'clock. I'm gonna go to bed a little early today. I'll be kind of unavailable tonight because I want to go to sleep. I'm just really, really tired. Again, speaking for 7 hours a day, 5 days a week. It's a lot, man. It's just a lot. And answering emails, answering phone calls. I want to make sure everybody stays in business, but again, I'm a human being as well. I get pretty tired as well. So guys, have a great night, everybody. I wish everybody the best, and with God's help, we'll see each other all tomorrow. Take care, guys.